What's going on, everyone? I hope you are well. It's been another strong week. I have not been, I don't feel like for the last 2 weeks, doing any type of weekly summaries, including it on the document. There's just been a lot of other things going on. I think it's okay. It's not a problem. We have to prioritize. Nevertheless, it's been a really, really, really strong week. I feel that CTM continues to grow, to mature, to be stronger than ever. And on this Friday, after us putting in another week of heads down, working hard, something to feel good about. Let's take a look at what's going across. Keith, what's up, my brother? Sharon, everyone. Glad to see you all here on this Friday. All right, let's take a look, and we're going to start off obviously here on the DXY. Yesterday's TA, we started off the video. You also don't see almost this whole week session segments below. Again, that's something that I like to include. It's only been these last few days. There's just been a lot of other things to prioritize. That's all, and you'll see that even on the Discord in just a moment. Today's session, I think it's as important as any other one that we've covered this week. I'm going to try to be quick, concise, and clear, but it's Friday and we get to enjoy it however it comes out. The TA shared yesterday was super nice. One of the things we talked about was that the dollar, for us to see any type of change of trend taking place, right? And we talked about that. Like, to be honest, I was not even, I know that sounds silly. And I know that I've mentioned it the last couple of days, that Friday's non-farm payrolls, and it's a data point that could potentially change whatever the Fed's expectations of rate probabilities for the March meeting. By the way, let's see what those are now. Let's see if that Friday's drop. Look at that. We went from an 85 to 97% chance now that we will have a 25 basis point hike out in March. But we still have next month's non-farm payrolls, and we have 2 CPIs in between and a whole bunch of other data that will come out between then. So I imagine this is going to continue, and it could go either which way. We could start seeing even a 50 basis point rate. I don't think it's going to happen, but it's possible. All I'm getting at is that we are data dependent. We got lots of data to go, or we could see that, coming into the meeting, this even closer to 50-50 or whatever have you. I remember JP Morgan showing us, I don't remember when it was. I think it was sometime around here in very early January. And they were talking about the recovery of the jobs market. And I was like, I don't know. Don't ever trust an investment bank. Let's just continue to watch. I had that bookmarked for a while. I wish I still did, because it would be perfect to show it now, because maybe their timing wasn't perfect, but they had the trend spot on. And I always want to give credit where credit is due, right? So those that you were watching last year, you remember that chart. I used to show it. We used to refer to it every once in a while. Let's jump back over here. And the point of starting off with that and that was to say that why, of course, we were aware, because we talked about in the last 2 sessions. I wasn't watching these numbers. I do watch the CPI recently. It doesn't affect my view of the market or our positioning in the market whatsoever. Just noting that I wasn't watching it this morning. But we, ahead of time, yesterday, we were talking about watching the dollar, talking about how the dollar did come into our and was trading up off of that last bit of support. And we did a good job I just want to make sure that you could see my thing this morning. There we go. So we were showing that we came into this line of support. And before we see any type of possibility of a trend change in the dollar, we need to see first a break above this repair. And then we also pointed out this yellow line that I'm highlighting. And I said price needs to get above there. And I think that is this morning very strong awareness as we see the dollar now trying to take a look at that line of resistance. If I zoom out a little bit, I just want to see this area over here. I'm just going to clone this line up. Let me give me some room on the chart. And I'm going to clone that line up. Again, it's Friday. Hold on. Okay, so not really a big deal. I was more worried about down here. I was wondering, well, are we coming right into a close above this line over here that we have is going to signal that we have a major repair take place in the DXY and that we have a buy impulse in effect. Now, it's Friday and it still needs to clear above. Monday is going to be the tell on this one, but we are watching for this very important level. It is surrounded by the macro, as the macro is showing with super strong jobs numbers that we are not in recession, that the economy continues to not only grow, but the I want to say the technicals of the economy, when we're talking about the job, they remain strong. And I think most importantly, above all of this, and something that, again, hat tip to Luke for showing us the global liquidity and tracking what's going on. And it's about following the liquidity. A lot of people who are kind of like, I'm going to call them novices in the macro, talk about quantitative tightening that is currently underway and the risks that provides to risk. You know me, I go back to and looked at, well, previous tightening cycles, and I've looked at the last tightening cycle with you, and that was over here. That was, well, this is where liquidity starts, doesn't go back any further, but that was over here in December 2018. And during this period from right here in December 2000, that's 2017. Let me come to 2018 because this is when we stop. Right here in December 2018, this is when we saw the bottom of Bitcoin take place. The Fed was tightening as far as, the Fed was undergoing a tightening cycle in so much as that quantitative tightening was running all of this period, and including up until September 2019, quantitative tightening was running at its highest of the program. Rates stopped being hiked. This was the last rate hike. Now, risk did not wait for the Fed to pivot. Risk bottomed on the rate hike, and then because they knew it was a mistake, they knew the Fed would not be able to, even though they said verbally they were going to tighten further, we're not going to be able to. Weeks later, in the first weeks of 2019, Powell makes the pivot and says that we are done with the rate hikes. And you could see over here as the global liquidity was rising, as most importantly, in my view, this is when rates stopped. This was the peak of the rate hiking cycle. You saw equities go on to new all-time highs, and you saw Bitcoin make a massive 4x in a 6-month period. Right now, we're looking at, obviously, the degree of rate hikes turning from 4 75 basis point hikes. We've seen what looks like the peak of the rate hiking cycle, a 50 basis points, a 25 basis points, and now we're looking at March, and it looks like we'll have another 25 basis point hike. And in May, it's still almost 50-50, whether or not they pause or they have another 25 basis point hike. Come out to June, and June is showing us a lot of the same. June, very low odds of another hike in June. Very low odds. So we'll continue staying in front of tracking not only the technicals, the macro, because it's a passion of ours, I should say. It's a real passion, as well as the continued TA and discretionary trading. But at the same time, all of that is just for fun. I speak as us collectively as a whole because we're all CTM. We're really good at it. You have seen, if you just look now what's happened over the last 3 months, 6 months, 9 months, 12, like people are out there struggling to get all this right. And why we for sure don't get it right all the time, turn after turn, macro cycle after macro cycle, we do an excellent job of getting on and staying on the right side. There's no question about it. Over here, we have to watch what's going on with the dollar getting above. And notice that we didn't, and this is discretionary. Notice that we're not looking to take just the breakout above this trend line. We're waiting because there's resistance right above it for it to clear the resistance above it. And then if it's able to break out above, that would signal to us buy pulse underway. Yields, while they're really tracking up today, are still really negative. we have over here, this area over here, it's what for us would trigger a buy impulse. It's getting above 3.7%. That would signal to us that we're going to see bonds continue to be sold and a resurgence in higher rates potentially. But right now, technically, this is bad. This continues to be bad. This was our second impulse at entry. And again, right at the right time, we're able to get in front of it. Now, I know that we took an earlier sell impulse on the yields, and then that one was faded, right? And that one was faded right here. And then we were able to, out of the buy impulse, look at where it was faded, continue to get on the right side. And that's what we continue to do. And rather than being able to forecast what is going to happen, we take it all in as it happens, as it unfolds. And each and every day, we are working at sharpening all our skills, whether or not it is the CTM 1.0 TA, whether or not it is the macro, putting it all together unquestionably. And that's what we're going to keep doing. Let's take a look at the Nasdaq, because this was some pretty good TA shared yesterday as well. In so much we talked about the breakout outside of the upward sloping channel. And then the next thing that we did here together was put in a couple of pieces. We put in this trend line over here, and then we put in the horizontal line. And then in front of you together, we then cloned that and put that up here. And we said, look what happened afterwards. Look at the price action that occurred after we set our map up over here. And we came into the first resistance, rejected into it, broke above it into that second resistance that we put above. Price then came down, spiked into it again, and has since come off. And right now is again, into this resistance right over here. I mean, our TA is strong, and we continue to work on it. We want to keep getting better and better. And as you often know, and we'll see, right? Those that have been here know, and those that are new will see. It is a continued learning process. So I pay the most attention to when I get it wrong. And I use those as lessons to ingrain into my consciousness, into my mind, into yours, so that we can continue learning from it, so that going forward, hopefully, we just make a little less mistakes, because it's all about mistakes and timing. One of the things I've tried to work on is my timing. I happen to see things often just a little bit earlier than others out there. And I'm trying to work at noticing it, bringing it to the attention of all of us, myself, the community, and then using our TA skills to make sure that we get that timing correct. And all of that, we have to look at oil this morning. Oil, look at that, beautiful. I say beautiful only because this, right? That's a breakdown. We talked about this. We gave really good TA as far as this. It closed below. That was our signal for sure, as we described yesterday on yesterday's session. A close below sets off a buy impulse. It is also the exit of this trade over here. This is a losing trade. I know that. I don't know discretionary, but I know mechanically, like 60% of our trades are expected to be losers. We're good with taking losses. We just want to be on the right side. And then you can see what happened afterwards. After that close below, we could see now in real time, and that's not the cleanest. This is better. You could see the breakdown, the retest. Look how it's beautiful, though. It's so beautiful. Like, this is our sell impulse line. And then you see right here, this is still resistance. This is a still resistance. Price comes in there. It closes below on the 8-hour here, but spiked into the other resistance. And most importantly, is now making that low resuming off. This over here bodes very well. We don't know how long this would carry. Yesterday's session, I just want to reiterate, I said that to keep us now from getting, this is all discretionary. And we cover discretionary TA each and every day. It's part of our overall education. There's no question about it. Over here, we have what I said price would need at this particular moment because it could break down here and then come back up into this area. This is no man's land right now. And that will continue to be no man's land until something else gives us an indication that, you know what, at this point in time, maybe, I know I'm getting ahead of myself now. I'm not going to use that type of buy impulse, because a break above that sends us back into resistance. And at that point in time, it's also going to be a confluence of resistance. You see what I mean? Like if price trades up over here now and then comes into this, It's got this broken support, now resistance to come into, and it has this line, this touch, this resistance line to come into. So I'm saying to keep us protected from a chop, we have to get above this until we look for any type of buy impulse to begin now on oil. This is just the same TA that we shared yesterday and continuing to build off of it. If we do see things develop, if we see oil come down further, make another leg down, of course, we're not going to be waiting up here and up here for looking for a buy impulse. We have to take that as it comes. In a similar way, on the macro, we're data dependent. On this, we have to take it as it comes. This I like because, yes, I am not rooting for inflation to take hold further. Now, why it's highly debatable about whether or not the Fed reaches its 2% target or anything like that. I don't think that's their target, personally. I think that they would be really happy somewhere between 3 and 4%. And I think that would really serve and meet its goals on many different areas, including doing a good job for the government and helping inflate that debt away. But right now, to see, as Powell was very happy about, to see that, as he called it, the deflationary forces and conversation beginning, oil coming off over here is a really good sign that we're not looking at that roaring beast of inflation potentially in not February CPI, but in March CPI showing higher inflation readings. As we talked about, that then becomes a problem. So the further off energy comes, the better off we're looking at the Fed being able to achieve its main goal of bringing down inflation and then moving towards that market pause. So I'm look, follow the technicals, and that's what we're doing right now. So I don't really want to do too much over here on Bitcoin, except that we'll say that we continue to trade this channel that's within a channel that also is above the log scale breakout, right? And again, not only do we do TA all the time, I really like CTM 1.0 TA. I think we're really good at it. I think but better than that, I think we get better at it all the time. So that is a look at the markets. Let's take a look at CTM positioning, because we had a new entry occur on Bitcoin. That just the new long entry. We're right at the entry right now. And now we have all three. We have Ethereum, Cardano, and Bitcoin all long. This was not seen at all through 2022. There was not one buy entry on Cardano all of 2022 on the 8-hour. There was on Ethereum. Mid-July through mid-August, Ethereum booked 52% trade on the buy side. Bitcoin took some buy entries, didn't have the best year on the buy entry. During that period where Ethereum really roared, Bitcoin put in a nice gain, but nothing comparable or anything like that. This year we're seeing Bitcoin outperforming Ethereum. We're 4 weeks in, but nevertheless we're seeing Bitcoin outperform Ethereum, and we're seeing Cardano here building its open trade, and I like seeing all three attacking on the buy side. I have over here below the second panel view. I called it the second view with the panel below. This will be added very soon into the dashboard, so that depending on which view you prefer, it's very easy for you just to one click, have them and save them, be able to look at what's going on. And then regularly now in our live streams, I'll also talk about what's going on. And from Cardano's perspective right now, it's holding healthy, these open buy positions. Ethereum, look at the market. It's kind of sideways, and same thing. Ethereum's just getting going over here. It's basically at entry. That's after closing its first long trade of 23, excuse me. There was the long entry, there was the close. And same thing with Bitcoin. Bitcoin, if this rolls over, will be the first to exit this trade. It just entered the trade. And again, what we do here and what we do really well, let me jump down over here and just show you a little bit on the Bitcoin. And you're looking at, by the way, the last 30 trades. We'll talk about this a little bit later in the session. And for Bitcoin itself, this is going back to, it's going to be different on each one. For Bitcoin, this is going back 6 months. And so in the last 6 months, Bitcoin over the last 30 trades has been performing pretty well, right? Bitcoin right here will get rid of its long trade first. What does that say if I go in there? I saw something pop up. There we go. Oh, okay. That's the licensings. So that's the beautiful dance right there. They're all three long. Cardano holding its position comfortably, as it should. It's 4% into profit. Bitcoin just entering would be the first to cut its losses short. You could see this is very close if you go back 1 year, if you go back 2 years, 3 years, 4 years, 5 years, 6 years, 7 years. 40% profitable is what Bitcoin averages. That means 60% of the time you're going to be wrong. That means 6 on average, 6 out of every 10 trades you take are going to be losses, right? Are you prepared for that? You have to be mentally tough. Derek, you want it on the daily as well? Absolutely. With pleasure. We'll get that done. And Ethereum is a little bit closer. Again, it's right around entry 2. That would be looking to exit. This is also on the, I know that we keep doing a lot. It's what we do. It's like we're constantly compounding our own growth. We'll get this view out on the dashboard as well for all of you. And then Derek on the daily. On the daily, we're looking at Bitcoin holding a 25% open trade on the buy side. Buy side alone is enough to get it done. No leverage. It was joked that, like, I know that we talk about light leverage here at CTM as being something like 1.15% or 1.5%. That light leverage, by the way, makes a significant difference in return. There's no question about it. But no leverage is needed whatsoever. No, the returns that we're looking at here are quite significant. Buy side only, no leverage is more than enough to get it done. There's no question adding in the sell side significantly has increased profits. Ethereum, buy side, 33% long. And then now Cardano finally starting to build. It's a long position here, 8.8% into profit. And it's beautiful. It's beautiful knowing when to be in the market and when not to be and on what side. It's even better not to have to incorporate the macro and discretionary TA. Now, I know we love to do it. I know that we love to talk about the macro and, why often in real time, a lot of the things that we're seeing go against whatever the current narrative is. And it's not really well embraced. It is later on, people then are picking up what the narrative that we've been sharing, right? So we're really good at it. We're really good at the macro. We're really good at the TA, but it's much better not having to incorporate that into your investing style, unless you've been doing, on par. We'll talk about that in 1 second. This will also be added on the daily time frame to look at this. And just this, it's beautiful to see which is holding the torch here. Right now, this might be a rare event. It's a rare event. All three will be making new all-time highs at the same time. When that's happening, it's obviously enormously bullish. But often what you'll see is one pair making new all-time highs. You can see if you look up to the top on the blue screen, Bitcoin is running sideways, not making new account all-time highs. If you go to the middle view, the black one, you can see at that particular time, April the 9th, you see that also Ethereum's not making new all-time highs, but Cardano is. And and then Cardano starts running flat over here. First, you see Bitcoin make new all-times with Ethereum, then Ethereum continues, and then both of them on the top start running flat. And then Cardano picks up the torch and starts running. I hope we get to see all three making new all-time highs at the same time. That would be really nice. The addition that we've seen in the stock market, this is just 2023 CTM as we polished up our, let's call it crypto work. We're able now to move that hive mind and focused in on things like the stock markets. I was quite surprised. By the way, a big shout out to Keith. Let me jump up over here to the beginning, and a big shout out to Keith, because Keith was really instrumental in all of that. He was real because Keith has been with us for going on 3 years now. And throughout all of the building that took place in during CTM 2.0, Keith was like, "Yeah, I love you, but I'm not right now." And like that constant, we talk about in CTM often that things that have staying power, they're going to make it to the top. We talk about the hive mind buzzing, right? And that's all the things we're always doing all at once. And then whatever has that like real true staying power is going to bubble to the top and have that lasting staying power, which is why we encourage everyone to be persistent. Like if you propose something and like there's crickets, silence, and no one's interested, that doesn't mean anything. Keep going, always. Keith was really instrumental as far as the move over into the stock market, and also a proponent that, guess what, George? We have crypto style returns inside 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 stocks, and I didn't really believe that. I mean, now I do, right? And you could take a look at obviously what has occurred on. Let me just jump over here to the T triple Q, right? I'm in my T triple Q trade right now. Some other people, if you look at obviously this is going back to 2020. That's the buy and sell side. And then if you look at what's going on with the FANG, I know some of you are in this trade, 33% open profit. I am not. I took the T triple Q. And if you look at what this thing has done, is insanity. This is like Cardano, Ethereum style returns. Coming back over here, I'm trying to go to, right? And like we're just getting started. I mean, we've accomplished a lot, and we're good with the FNGU and the inverse of that, with the T triple Q, with Tesla and TSLL, like 1.5 times leverage on Tesla. But I will continue our work and my work over there. There's no question about that. Let's get into a few more things. This is great. So a couple of new channels, lots of new channels actually. We have the trading view questions, right? Sale guy proposing when someone asks the question. For example, Mr. Pizza is talking about setting up alerts and whatnot. Sale guy is proposing that what you do is you go to create thread when you're answering it. And it's going to be easier to keep everything organized and situated. Really good stuff. We have the developer channels over here, and that is where people are able to talk about automation through APIs and whatnot. It is different. It's a different set of development and developers that's taking place on the core level. Nevertheless, the core developers will be able to monitor and watch, and we're looking always for that new talent. Believe you me, it will take time. We are humming and running really well. Don't expect to just jump right in. We have Fire continuing to work out the CTM positioning, right? This is going to show like automated alerts every 8 hour showing what the current positions are. I will also add to that, just set up a webhook and alerts into the Discord channel. Its CTM positioning is not available yet because it's still being worked out and designed. When there's new trades opened and or closed. And then we have obviously the community chat. We have the three strategies, right? The cold storage stash, long-term fiat strategy, and CTM 2.0, and stocks. It's really 4 now with stocks. Nuggets are where you could share anything that you received well during the live stream that you want to share with others. And then depending on what the emoji reaction is, we know whether or not it has staying power or not. I added a new macro channel just now, right? I added a technical analysis channel for those that are exploring TA. And also, I think very important, discretionary trading. Let's talk about this in relation to, and then I moved over here to social, by the way, just so you know. You have CTM in real life. You have meetups, and I put the media and the meme party down over there. So I just want you to be aware of where everything is so you could follow, participate along with all of us. Let me talk about the macro. Let me talk about the discretionary trading. and the TA. Let's continue moving forward over here. And all right, this is coming off the discussion this morning. Mad Dog pointing out, you know what? It might be like, all right, well, sometimes I maybe the buildup is at the end on this. So bear with me for about 4 or 5 minutes or less until I get to the punchline. All right. But Mad Dog pointing out for sure that, look, like what we're doing inside CTM 2.0, like that is what anyone that is with us and joining should have their like main focus on. But as you can see from my daily live streams, I still focus on TA. I still focus on that discretionary aspect. And I focus out, of course, on the macro as well. We do it all for fun. That's what I like to say. It's a passion. The markets are a passion for us. We do it that part for fun because we love it. But CTM 2.0, if you have goals, financial goals in the life, if you're looking to climb the highest summit, and if you're looking to do it with the most incredible team, that is what deserves your focus. Mad Dog, true to form, is trying to help CTM get to where they need to go because we're climbing this beautiful mountain, right? And some of us are really focused and intent on summiting it, knowing that once we summit it, that there's going to be another mountain range behind it, and we got to make sure that we're prepared to get to the next one. And then other people who are joining this team, they're like, "Wow, check out that cliff over there. Look at that ravine. Look at those, like, because it's all beautiful." And so at the same time, we want you to experience that. But at the same time, we want to make sure that you got your eyes on the prize because some of these things could be really good and others could be really dangerous. Every once in a while, someone's going to go off exploring and fall, never come back, gone. We don't want that. We're all look out for each other. So it's a tough though because we have a separation of experiences between CTM and CTM core. People in core used to think the same as far as looking for that discretionary or traditional CTM 1.0 style TA, and core used to think that, and now they know they're not going to compete with CTM 2.0. But it does take experience to come to understand that. A discussion forum separately discussing discretionary ideas would be a good addition. I want to encourage trading of that discretionary account on a paper account to have something to compare against 2.0. I think actually by people focusing in on the discretionary channel over here, by doing that, talking about it, and at the same time keeping a paper account of their progress, I think that is going to help their overall cut down their up speed into getting to where they need to be with CTM 2.0. Because they're going to realize a lot quicker that it's CTM 2.0 continues to outtrade them. So I think it's a really good thing. I think it's a great thing. By the way, CTM Core continues to toy with some type of hybrid between CTM 1.0 and 2.0. All of this could also lead to some happy discoveries as well. We want that. The only thing is that you're very new, so you want to focus on what is highest signal the most and not get confused. Once you build out this foundation, you could actually contribute here a lot more. All right. So what else? This was great advice, so I'm going to share it here, right? And look, the advice I could give, I had to completely remove my old way of thinking, deleted old charts and setups, and focused 100% on CTM 2.0 until I was fully able to comprehend on my own terms. My discretionary would lead me to doubt the signals, but when utilizing a mechanical system, there's no room for bias. Just recently was I able to get back to TA. However, now it's just for fun. Look, we're going to get into this in 1 second. Hold on 1 second because there's a great response over here. This is something to talk about really well. Here's my situation and why I'm running a number of portfolios. One of them being full on CTM 2.0. I don't trust anything right out of the box when it's new to me. That's CTM to the core right there, right? You want to be able to discern. It's important. I just joined 2.0 after following CTM for about a year in 2020. I'm super excited. The back testing demonstrates the power of it, as well as the forward test now as well. And the template presentations are very well thought out to allow both passive daily time frame or more active, the 8-hour and 1 hour on equities trading by the CTM community. At the same time, I've been studying and practicing TA, macro analyst, nonstop for 4 years. And I don't see that as a liability in making the most out of CTM 2.0. So one of the good things about having these different channels now as well is it will breed less confusion. There are some people who are able to talk about and separate. By the way, did you notice over here that Flavorous Fraz is saying just now was he able to get back to normal TA after a significant amount of time spent here in CTM? So for different people, it would be at different times. I don't think most people just joining would be able to do that personally. And there's a lot of confusion when you're out there listening to different macro perspectives, different types of TA. We'll talk about that in 1 second, right? But I think the separation over here will cause less confusion, because if we're in CTM 2.0 and you're talking about discretionary things, someone else with not your same understanding of many different aspects, they might get confused. They may, oh, look at the wildflower over there, and then fall off a cliff. So I think the separation's good. As an engineer, an architect, and a human, I really enjoy understanding the technicals and emotions of the market and learning about myself through the emotions of the market. For me, it's a way of understanding the world and myself more. I would not know so that all is beautiful, by the way. And at the same time, I'm just going to add, many of you might have gotten into the markets probably not with the idea of looking to learn more about yourself, but probably with some really concrete financial goals in mind. Now, this one's a bonus. As you know, that I often talk about, you want to conquer the markets, know thyself. That's true. But at the same time, there are building blocks and stepping stones. And if you want to get to the end goal, obviously CTM offers that, probably far and exceeding anything you've ever dreamt of achieving. So there's different I'm not going to be able to say the word. But anyway, I would not know what to do about the promises of trustless money crypto unless I studied enough that I could trade it manually and had skin in the game. I wouldn't know that much about AI, Elon Musk, how VCs work, and all the corruption in the markets, government. And that's all. That's part of the ongoing education. So all in all, I don't think it's a liability to discuss and predict per CTM 1.0 or Soloway or Turtle Traders Earning a System. In fact, learning about the emotion. Well, you know what? I don't agree on that part. If someone like Garth Soloway is attractive for you, then I think that you should definitely dive in, see what it's all about. But you should keep that out of CTM discussions, because that is, talk about it in whatever forum Soloway has. Soloway could be quite confusing. This is a video he just put out. Let's take a look together.
Overall, my macro view is still that Bitcoin likely hasn't bottomed. My macro view, the reason I think that is that I've never seen a bottom in an asset where there's so quickly so much bullishness. And I flip on Twitter and some of the influencers everyone is just so bullish so quickly. Usually if you go back to the 2009 lows in the stock market or the .com lows, the first 30% move up off of the lows, everyone is very scared. And you're not seeing that just yet. At least to me, I'm not seeing that panic. And so, there are things like that. The other thing that bothers me about Bitcoin potentially being already at a bottom, and why I think it's not, is that the Fed stopped printing money and they're actually sucking money out of the system. Every previous bear market in Bitcoin saw an 80 to 85% decline with stimulus, with low interest rates, right?
So, I don't know too much about Soloway, but he's talking about his macro thesis here. And if someone is listening and watching to that, they may be like, well, all right, this guy, he sounds good, but I'm not sure he knows what he's talking about. If I look at what happened over here in 2019, I am aware of the macro and the dynamics taking place. and quantitative tightening was running over here, and it stopped on September 2019. It stopped. This is when the Fed needed to stop quantitative tightening and then start balance sheet expansion again, because the reverse repo market broke. Overnight rates, they skyrocketed to 8-9%. But what was happening over here is that this was the Fed doing the exact opposite of what this guy just said. He said that the money printers were running in 2019. No, they were running in September 2019. This is when the printers began running again. And it's very easy to see. You got to go to, let me go ahead and pull it up for you, just so we could, some people are very visual. And again, the education here is quite important to get right. So let me pull up, the Fed's balance sheet. Let's put it on a new pane, and then you could take a look at it. And we got to go to the daily time frame in order to see that. And then just let me come back into 2018, right? So you could see over here in 2019, look at the Fed's quantitative tightening is running all of this way. It's going lower and lower and lower and lower and lower and low. And this is where it stops in September 2019. That's when the repo market broke, and that's when they needed to start balance sheet expansion. So, I mean, he was very clear. He's very clear in these words that never before during a bear market have the printers not been running. And because of quantitative tightening running, he believes that Bitcoin has lower to go. And why Bitcoin may or may not have lower to go, it's certainly not because quantitative tightening wasn't running last time. Quantitative tightening was running last time. What happened was that the Fed stopped hiking rates here. And it wasn't like they like announced they were going to stop hiking rates. They actually hiked rates at the bottom. This was a rate hike. Market didn't buy what the Fed was selling. Risk went on to rally. Now, there's more to it by that. He also said that most times he sees, markets come off 30%, and during that first 30%, people are quite bearish. When I look around my feed, whether it's someone like Garth or Gareth who's saying that they still believe that we're going to see Bitcoin 10K, or if I look around at like a whole litany of accounts, people remain incredibly bearish right now. Now, I don't know if the bottom is in or it's not. I don't need to know. But if you're talking about a macro thesis, well, that is that's in direct contrary conflict to my own macro thesis. But I could say that mine is going off of what's happened in the past. There's no way to. It's confusing. So it's confusing because it's not what happened in the previous cycle. No, that's not true. There was no easing taking place. There was tightening taking place. Quantitative tightening was running. Balance sheet was being contracted, not expanded. So the next thing that, during this period, a lot of crypto Twitter, as it is today, was extraordinarily bearish. If you went on any influencer's YouTube channel, you were hearing things like hyperwave, and that you're looking at Bitcoin trading down to $1,500 because every time in history, except for the Nasdaq during one period, every single asset in history has had this type of drawdown, yada, yada. It's not what I saw, right? This is on January 6, 2019. How's this for a price prediction? I see Bitcoin coming to 8,400 within the next 3 months. This was completely counter trend to everyone else, but I was following 4-year cycle theory, right? And why I was off by 30 days at the time that was put out there, I don't know, quite a significant call. But we did see Bitcoin rally during quantitative tightening, a massive amount of money, a massive amount. One thing different, there's two things that are majorly different today than back then. One of those is that today we are seeing a much higher market cap. Instead of Bitcoin trading in a range between $3,500 and $14,000, you're now coming off a market cap that was, let's call it 4 to 5 times greater. So that's significantly different, and maybe or maybe not, Bitcoin would be able to make a move. And we look at it in the beginning, and I talk about it by putting up in the past 2 cycles, it's retraced in the past 2 cycles, we've retraced all the way back up to this particular fib, right? Does that mean that we're going to trade back up to this fib right now? I don't know, potentially. We saw Bitcoin make a move from 30,000 to 69,000 in just a few months. So I don't know if the market cap being significantly bigger than it was back in this area over here where Bitcoin put in a 4x is going to prevent the same type of measured retracement this cycle. I would imagine that if it did it this cycle, it could do it this cycle. But the other thing that is entirely different is that during quantitative tightening, this particular time taking place, quantitative tightening taking place over here, the US Treasury was not injecting a massive $400 to $500 billion of liquidity during that 6-month period. And during this 6-month period, the US Treasury is completely counteracting quantitative tightening. So I think that's significantly different. And I think that is the truth of what your macro thesis should be right now. But that's a lot different from what this thesis is. This thesis is wrong. That's not what happened in the last cycle. Quantitative tightening was indeed running. And I think it's very confusing for people to be looking at, things like whether it's the turtle system or whether or not it's someone like Salloway and talking about that in CTM. Talk about it there, interact with it there. I just don't think that this is the right place for it. I think that not only will it breed confusion, I don't really know that it's the best either. That's the only thing. And just, it doesn't belong. That's all I'm going to say. Maybe add a CTM 1.0 channel within the CTM tab. Separating the discussions will help reduce confusion, still allowing others to explore over the long term. I think most will see CTM 2.0 as the way to go. And I think that exploring discretionary, exploring TA is going to help them get there quicker. Only that we want to avoid the confusion of others who aren't maybe able to separate, as well as someone who might be able to do that very well. I could see, for example, HeyU is able to do that very well, right? CTM will show itself to help us improve the CTM strategy. And I'd love to see something rule-based come out of CTM 1.0. That way we can use to objectively improve CTM 2.0 further, even though CTM 2.0 is already fire. To be clear, I only trade CTM, these 2.0 these days, but I have the privilege of being intimately involved in the system since the start and deep diving into Saddam's result updates to help solidify my confidence. And you can't have that confidence without time. So that's one of the things. So while you could gently nudge your friends to try to get them where they need to be, they have to learn from themselves. I really encourage people interacting inside the discretionary, trading, whether you want to call it CTM 1.0, or if you have something else to bring to the table, the TA channel, and also the macro for sure, right? And I think that's going to help you actually get to where you want to be even quicker. And I think it takes time to get there. So that is all what CTM 2.0. What HeyU is doing and saying, I need to know for myself. That is CTM principles to the core. Absolutely love and embrace it. Good stuff all around. All right. Definitely. I think it's excellent for many different reasons. Many different reasons. All right. That's Friday. That's a wrap. That's where we're going, right? And we'll just leave it off there. No, we got one other beautiful thing to perspective. Let's continue. And this was shared over here. This is shared by Flavors Fraz. And this morning he just went off on a whim and he's looking, right? This was shared over here as well. There's so many different discussions that are fantastic and everywhere. Look, this is Bitcoin over the last 30 days. For new people here, you need to look at your last 30 trades and see how they stack up. And if you're not close, then you're in the right spot. You need to delegate all of your energy to figure out how you could replicate CTM results. You just need to remain disciplined. And so what I love also is someone like Mad Dog, who's just joining the team, who's looking out, and trying to redirect energy, and including the idea of separating channels, right? Someone like Hey You, who shows so much CTM talent, and is like, look, this is articulating why he's able to do it, and I think he'll appreciate the separation now, so that he could interact and explore those things that he wants. And then someone like Sale Guy and everyone else, Flaver's Frav, giving that perspective also to help everyone get where they need to be. And check this out. This is what he's doing this morning, and he's showing us over the last 30 trades. So it's different the last 30 trades for every asset. For example, if you look at Bitcoin over the last 30 trades, you're going back until 6 months. If you look at the last 30 trades on Ethereum, you're going back 10 months. And if you're looking at the last 30 trades on Cardano, you're going back 14 months. So you could see 6, 10, 14. It's 30 trades, and it's a good way to look at things because it's different. And it's for each asset a different time segment as well. Looking at Bitcoin over the last 30 trades, you're looking at a 69% return, a 16% drawdown, right? It's those market conditions over the last 6 months are anything but ideal for CTM 2.0. Why do I say that? Because you are looking at a very compressed, low volatility, narrow range of trading. That is not what CTM 2.0 is designed for. Nevertheless, look how well during that adverse period CTM 2.0 performed. Look at Cardano during that period, a 238% return, last 30 trades, 15% drawdown. BNB, 95%, 18% drawdown. Look at Ethereum, 374%, 15% drawdown. EGLD, 766%, 22% drawdown. The TQQs, all 30 trades, 92% drawdown, 33% drawdown, 92% return, right? We have Tesla, no leverage, 85% return. Was this a good period for Tesla, the last 30 trades? I think most people have struggled on Tesla. Less than a 10% drawdown. You know, FNGU, 100% return, 9% drawdown. And it just like, look, all we're trying to do is we're all on the same team. We're trying to get you and give you an inspiration of why you want to devote yourself to doing everything that's within your capacity and energy to do what you can to show that discipline and focus to be able to execute on where it matters most. And we're going to keep there with you. We're your team. So we're going to keep doing it. We're going to keep guiding you in what is the direction to help you summit. We want to bring everyone there with us, and we encourage everything. And now you have different forums to go ahead and work through those discretionary ideas, traditional TA, talk without confusing everyone else. And that's a great place to be. That's a great week. This is a great week again. Thanks for being everyone part of this. Thanks for being a part of all of this, because I just put out a tweet. Let me find the tweet and let me show you, because this is really, really, right, coming off of CTM here. Who you surround yourself with has a significant factor in your success. What we have built with CTM is astonishing. The people I work with are so incredibly intelligent and talented. The people who have recently joined us are wonderful. Thank you, everyone. God bless you. Have a beautiful weekend. I'll see you all on Monday, and we're going to get back to work.